Welcome everybody. It's the first day of August. It's Tuesday. We're gonna go over our 100% trade in 15 minutes. We're gonna go over what to look for the market. I think we have news tomorrow. It's gonna be a quicker lesson tonight. I actually mean that it's gonna be a little bit quicker. We know what to look for in terms of intraday trades. I just want to go over a quick market commentary. So I'm gonna look at really quickly the weekly chart on ESU 2023. Let me get rid of this. Um, let's get into it. Give me 1 second. So, what I'm looking for the market is we have this small bullish gap that we could kind of trade back into. We just had news on the treasury bonds getting downgraded from a triple A to a A plus or something like that. That's not really too important unless you're a heavy swing trader. We're gonna also do a swing trading lesson very soon. I've been gatekeeping a lot of my swings, but I know you guys can handle your risk and manage swing trades. So we'll get into that too. Swings are a lot of fun. First thing that I'm looking at is obviously this level we've been having our eyes on, which is that 4662 and 3/4. I don't know if we can get there this week. I have to really look at the news. The most important things for this week, they're not actually listed on the news. It's going to be Apple earnings, and I think we have Amazon, if I'm not mistaken. So tomorrow we have this non-farm payroll or employment change at 8:15. That'll move the market a little bit. In terms of 10 a.m. news, we actually don't have that. What we're gonna do tomorrow's game plan is we're gonna let the first 30 minutes play out. Hopefully look for a failure setup like we do with the higher or the lowers, etc., etc. That's gonna be fine. That's all fine and dandy, right? For ESU, the weekly chart is showing a bullish gap that we could reprice into. One scenario that I'm looking for, and it's kind of steep. It's, trade back into here and then come back up and polish these highs. This might take a week or two. So what I'm gonna ask you guys is, because I want to be responsible and think long term, is the past 2 days have been phenomenal. Honestly, I've been on a little bit of a streak. We've been making very decent money. Everybody likes to get excited. Everybody likes to, you see your account grow exponentially. Let's calm down a little bit tomorrow. Tomorrow, I don't care if we hit a 500% with zero drawdown. I have to do the responsible thing and actually size down a little bit. And I know you guys don't want to hear that. I know we want to keep the good times rolling and momentum is in play and we have the hot hand. Whenever you start thinking like that I can't miss, and honestly, I started thinking like that today, you need to be self aware and just be like, all right, humble down, buddy. It's only 2 days into the week. Let's calm down. We still have a little bit of time. Tomorrow, let's take it easy. Tomorrow, let's take it slow, right? The weekly chart is showing just a little bit of not a lot of range. It doesn't mean there's not any opportunity. The weekly chart hasn't really expanded or anything. We have this small gap that we potentially could fill overnight on the daily, right? This is like a little volume imbalance or a gap, whatever you want to call it. So let's make this drawing here. This guy right here is so tiny. And the way I draw them is a little bit different. I draw them from the bottom wick to the top body. It's a little bit weird that way, but I want to see where price closes on this daily candlestick right here. If we want to come back up, and it looks like we polished these highs actually. So tomorrow we can come into the day. I don't want to get you guys too biased up, but we can come into the day tomorrow and look for this level of 44725 to get hit on the daily chart, right? I'm going to put that here. 4557, excuse me, 25 on the daily chart is the draw on liquidity, right? What do I mean by draw on liquidity? I don't want to sound fancy or super smart. I just mean the market would look to trade into there because a lot of previous old lows are sitting there, right? When everybody talks about the draw on liquidity, where are we headed to, et cetera, et cetera, it's just that what's our target? What's a realistic target for us on the daily chart is these guys right here. So we have one guy right here. We have another two guys right here. We could draw it like that. Draw on liquidity is just that what's a magnet for us, right? Right now, the daily chart is showing that. Let me get rid of this nonsense. Let's go on the 4-hour now. We're going to do a lot of multi-time frame analysis. We're going to really get into it. 4-hour looks good too. You could even label this here if you want to be extra, if you want to be, uh, what do they call it? A good chartist, right? Relative equal lows. We'll put it on the, how do you do this? We'll put it on the bottom, right? That's clean and simple, right? I'm going to just leave that on my chart here. Let's get rid of this here. And what I'm going to do is I'm going to post this tonight. We'll copy the image. Let's post it in the chat. And I want to see how the next 4 hours play out, the next two candles that are to come, right? Futures, I don't pay a lot of attention to futures overnight. Even though I am swinging a couple things long, I don't really try to stress out about futures that much, right? They could dip down 30 points and by the morning time they're back green. Don't over stress about futures. Just have a couple targets set out. Look for where is the draw, where is the next reasonable level to draw into, to trade into. That's what we want to see, right? And what I'm going to do is I'm going to just put an alert on the low we just made at 4572.25, whatever. That's good enough for charting, right? Let's get into SPY really quick. Does everybody understand why I picked those lows? Do you guys get that on the daily and the 4 hour? I don't need to explain that, do I? If I do, I absolutely can. So I don't want to seem like I don't care. That was kind of rude how I said that. You guys understand why I picked those lows? Perfect, perfect, perfect. Let's go. All right, let's get it. Let's get it. Let's get it. So what we're gonna go into is just a quick trade recap of why we took this trade, right? So the first thing that I'm gonna go on is right over here. I think it was actually cleaner on ESU. Let's see. No, no, actually it was clean on SPY. It was clean on SPY. I'm doing too much. Let's go on SPY. Let's go to where we took our trade today. And without even moving this, sorry, hold on. Feel like I haven't done a lesson in a long time. So today we had 10 a.m. news today, right? Did I forget? We had 10 a.m. news today, right? Somebody help me. Where are you guys at? Thank you.
Yeah, we did.
Perfect. Thank you. Thank you. Okay, we had ISM PMI numbers. Excuse me, I forgot. So the first thing that we were looking at is I didn't see any long opportunities this morning, right? Market opened up at this. What was the opening price? Opening price for this candle, 456.27, right? A lot of people like to play opening print. I don't really care too much about it. If you know somebody that trades that way, more power to them. I don't really care too much about opening print. A lot of people say that it's bullish over the opening print, bearish below it. I think all that's junk. That's pretty obvious, right? Opening price of the day is opening price of the day. Don't stress out too much about it. So the first thing that we saw was a nice push up. I was watching this 1 minute gap to go long. It kind of got overran. We saw that news release come out at 10 a.m. We saw it dip down in the beginning, and the first move, I didn't want to short that, even though we broke structure. First move was pretty fake. That's why what I'm going to also bring to your attention, I know I'm a little bit all over the place today. I drank a lot of caffeine today. What I'm going to bring to your attention today is that when these news drops happen, you don't want to play the initial first candle reaction. Like, I know sometimes it'll immediately dump or it will immediately pump and it'll follow through. Most of the times, not all the time, right? Take this with a grain of salt. Most of the time when you get a crazy reaction, crazy candle like this, I know this candle closed pretty indecisively. When this candle first opened up, we pushed down. It was a full body red candle and we immediately got bought back up, and this price, this candle closed up all the way here, had a crazy push. You don't want to play that first initial reaction. What tends to happen is that option premiums, they get cooked. Doesn't matter what side you're playing. It's not worth it to fill and chase, because if you get one bad fill on an option premium like that, when you chase this candle, you can go down instantly 25-30%, and it's not worth it for that headache, right? We let this candle play out, swept a high right here on 456, what is this, 94, took out the highs, right? This is a textbook clean failure to go higher play, right? Sweep the highs. At this point in time, we have a bunch of wicks. We left the high up here untapped. Break of structure comes in right here on this candle right here. As soon as we take out this candle, and what we see here is, where is my arrow? Where is my arrow? Is it this one? That's crazy. As soon as this candle right here, that's fucking, I haven't even seen that before. As soon as that big candle right here, this fucking BBC comes in through, no homo. As soon as that comes in, my idea is planted on shorts, right? Already we have the idea to take shorts and play the counter trend trade. That's where the idea really comes in. It's this candle right here. So simple trade. I know I don't need to do that much of a walkthrough. You guys already know what I'm talking about. We have this imbalance that we traded back into, right? Usually what I want to see is I want to see one candle trade up into it. I want to see this first candle that trades up into it. I want to see it close within this, fair value gap in this displacement box. I want to see the first candle close up into it. The next candle, as soon as it starts accelerating down and it turns into a red candle, that's where I'll take my entry, right? The first entry I bought on this huge displacement candle, so I got like a 48, 49 cent fill. The next candle we traded up. I think contracts went down to like 43, 42. I added on to my full position, got my contracts in, whatever I was intended to get into. Bought the full position here at 46, right? We had a nice trim at this guy right here, and then we had a nice trim at low of day, right? Not really opening price, but low of day at the current time. So super smooth trade, not a lot of drawdown, super textbook failure to go higher. Take a screenshot of this because I promise, like, memorize this in your head. This is what I wanted to say too to you guys. Let me get rid of full screen. Memorize this. I'm not even being funny. This is how you make a lot of money in the market. I'm not even kidding. I know a lot of people have a lot of different strategies, they have a lot of different ways to trade. If you perfect this from 10 a.m. to 11 a.m. and you have good execution and you can put a little bit of size behind your trades, I know it's all baby steps and to get there, it takes a little bit of time. This is how you start making a lot of money. I don't even want to sound like I'm gassing myself or I'm just boasting or bragging. This is how you make a lot of money. When you have trades like this where you can get in, ride a trade down, not see a lot of drawdown, trim, move your trailing stop up. This is how you generate a lot of fucking money in the stock market. I swear to God. This is all you need. Swing trading is free after this. Day trading becomes easier. If you can master this failure to go higher setup, I promise you won't need to worry that much about money anymore. And I know I sound like a snake oil salesman. I know I sound crazy, but the proof is in the pudding. If you can master this setup when the conditions are favorable, when you could do a counter trend trade against where the market was trading up into, when the market follows through as well, you can take a contract from 40 cents and you could run it up to $1. You could take it from 50 cents, run it up to $1.20. It happens basically every day. I'm not going to say it happens every day because I'm lying if I say that. It happens, I would say, at least 3 out of 5 trading days in a week. And if I'm wrong, if I'm lying, I'm dying. But to be honest, when conditions are favorable and when you could buy the options very cheap, you can ride them all the way back up to the options opening price, which was a target to sell into, and you can get that psychological level sell, right? So I had a couple scales at like 60. I had another scale at like 80. I think I took one at 90 and I was out full at like $1.01. So super clean trade. Bought a starter, added on to my starter. This is what I love to do, right? The starter is not going to always have the best fill. The starter is something I've been doing because it gets rid of FOMO, right? That's also what I wanted to talk to you guys about. Don't be scared to get into a starter. I know a lot of people think that, oh, I'm buying at a high average and I'm averaging down on a position. Ignore that. I don't average down when I'm down 50% on an option. I don't agree with that. But when I buy a starter at 49 cents and I'm buying a tenth of my initial size, my intended size, does ICT allow for sizing? And absolutely. Today was absolutely. If you guys trade simply off ICT, he calls this the silver bullet. Whatever that means, I don't know. He always comes up with these cool, fancy, catchy words how to trade. You can absolutely add on. My first initial buy on this play, I bought this big red candle, right? Did I chase it? Absolutely not. I don't feel like I chased it. I was taking this trade. I had reasons to be in. I buy the starter just to have a little bit of skin in the game. I want to see how the contracts are moving because you can watch the contracts, but when you're actually in a play and the contracts are moving and you're watching them, you're seeing how they're playing out, how they're acting on pullbacks, on bounces. It's good to have a little bit of skin in the game, right? So if you guys want to buy 10 contracts, right? Buy a starter with 2 contracts. Don't be afraid to buy a starter and then add the 8 when it's time to really add the 8. The only thing that you need to train yourself is that when it's time to add, don't be scared to execute to add. It's a skill that you have to develop. It takes a little bit of time because sometimes your starters will get cooked a little bit. Maybe they'll see 7, 8, 10 cents of drawdown. When it's time to actually add on to your position, your average becomes whatever your add-on is, right? So for this play, that was my idea, Raghava. Yeah, and I know it sounds crazy, like, oh, he's chasing. No, I'm not. I just want to see how contracts are playing out, especially because I'm signaling it to you guys, right? You guys don't need to buy when I buy my starter, but let me take the fucking damage first. That's also a luxury you guys have with the chat, right? You guys are paying money to be in here. Let me get damaged a little bit, and when it's time to add, you get the best ad. I don't care if I buy something at 49 and fucking, Ryan bought it at 43. I'm happy. I would love that, actually. You know what I mean? You spoke of a 15-minute bearish FVG that occurred. Yeah, absolutely. Let's go into that too. That's why I was looking at ES. I kind of forgot that happened today. Let's go into that. So, where was the play today? You gotta give me a second. No, today was Tuesday. Today was Tuesday, right? Yeah, yeah. I'm sorry, I forgot. It was this guy right here. I had this marked up on my chart. This guy right here. And the reason I had that marked up on my chart is because we took out this high. That was my main level to be in. So my starter came in, and now I actually remember the trade. I'm happy you brought that up, brother. Thank you. The main reason I got into this trade is after we had swept this high at 46, I think it was 09, 4608.50, after we had taken out this high, once this candle was fully green, that's fine. As soon as this candle turned into a big, excuse me, as soon as this candle turned from a full body green candle and it went from green all the way to red and started pushing down, I took a starter based off that, right? That was my initial starter. Now the add-on, we could do this back on SPY. The add-on came at 10 a.m. and I think I signaled it at 10 a.m. Maybe I signaled it at 10:01 for Twitter, but the add-on came, right here. The 15-minute was giving me the idea of why I should be short. I dive into the 1 minute to find the most precise entry where I could not see a lot of drawdown, and the thing is just gonna fly from my entry to my take profits. You know what I mean? Does that kind of answer the question? Yeah, it is. I don't know. I worked out for like an hour and a half. I went on a 3-mile run. I feel really good. I just have a headache, but it's okay. The caffeine is hitting. Though pre-market highs were not taken out, that's fine. The failure to go higher is based upon that. We'll leave some highs untapped, but once market structure shifts, don't worry about those pre-market highs. Sometimes I feel like you guys get mad technical. You have to just trade what's in front of you and don't think too much. I know this sounds rude and it sounds mean, but I'm being honest. Sometimes you guys think too much. I don't even think that much. All my trades are well thought out and planned, but to a certain extent, after it makes sense, I'm in. You can't think too much about, oh, we still have this high above. That's when in your head you start questioning yourself and you don't have certainty. You're in an uncertainty business. You need to have a little bit of certainty in what you're doing. I'm not fully certain that this thing is going to melt to low of day. Like, I can't guarantee that to you guys. But to be honest with you guys, I took a screenshot of this because you guys could give me my fucking flowers if you want to. How many times have we taken something from near high of day to low of day? How many times have we done that together? Fucking 20 times, maybe 15. A lot. It's been a lot of times. I've seen this so many times before. I promise. These are the trades where you get in with a good average. My stop loss, I bought it at 46. My stop loss was like 30 cents, 31. I'm risking 15 or 16 cents. I'm looking to make 40, 50, maybe 55, 60 cents. Taking something from 46 cents to what, $1.01? That's good risk to reward. And by the second trim, my stop loss is above even. So my risk to reward is not even like a 1 to something. It's fucking free. I'm not even putting anything on the line and I'm making. That's where trading makes a lot of sense for me, is after TP2 is hit, this trade is literally free. And I saw a tweet yesterday. Somebody tweeted this and I was going to actually go at their whole life, but I stopped myself. Somebody tweeted the other day, if you call trades a free trade, you're watching your P&L. That is the most ignorant thing I've ever heard in my life. Obviously, I want to make every single trade free. You're in the business of managing your own risk. You know what's the best thing in the world? When you're in a trade and your runners are in there risk-free. When half of your position is in there risk-free, no risk. What am I risking? Even if the trade went back to slightly above break even, did I lose anything? Fuck no, I didn't lose anything. I covered my commission and fees. I made money on the trade. I've already taken 2 trims. If it goes back to break even, it's a risk-free trade. What am I going to complain? I manage my risk absolutely extraordinarily well. There's nothing wrong with that. So when people say that, oh, if you make a trade, a free trade, you're watching your P&L. Absolutely, I'm watching my P&L. There's 200 contracts on the line. Am I not going to watch it? Somebody that tweets that, Fuck them. You don't know what the fuck you're talking about, ignorant ass motherfucker. I'm on Thinkorswim, by the way, but that's the name of the game. The name of the game is to hit it heavy, hit it hard, take your trims, and after trim two, make the trade risk free. That's the whole point. I don't even care if you're on futures. If you're in futures with 5 lots or whatever they call it, I don't even know much about futures. If you're in there with 5 lots, take off 3 and put the or contracts. You know what I mean? Fucking, I don't trade futures, bro. Fuck that. If you're in there with 5 contracts, bro, trim 3 of them and put 2 of them slightly above even. You have a free trade. You have a free dice roll. Whatever happens after that, you're good with that. You know what I mean? So, Andrew, you can stop the recording here. I just want to chop it up with you guys right after that. But